Hi, welcome to my YouTube channel, Learnwithdebbie. Today, I'm going to explain the accounting equation in a way that makes sense. Now, let's get right into it. We're going to be using a case scenario of opening a small supermarket. Now, imagine I give you ₦1,000,000 today to start a small supermarket. Just imagine it. You're giving ₦1,000,000. What would you buy? Now let's take for instance that I buy shelves to display my product. I buy inventory, which are the goods I intend to sell, and then I have cash left of 300,000 naira. Now this sums up to ₦1,000,000 that I have. Now, what does the business own? As at now, the business owns the shelves that I bought. The business owns the inventory that I got, the goods that I intend to sell, and the business also has a cash balance remaining with me. Now, what are all these things? These are called assets. All these are called the assets of the business. These are my assets. Now, imagine that you bought the shelves, the inventory, and the cash, and then someone walks in and asks you, who paid for all of this? Let's say it's someone that knows you before now and also knows your financial capability. And then the person asks you, how did you get all this? Who gave you the money to buy all this? Now, what would your answer be? We'll be looking at two possibilities. Option A, you invested the money. That means the whole sum of ₦1,000,000 came from you directly. That is what known as owner's equity. Another option is the bank lent you the money. You might have approached the bank for a loan and you were given this sum to start your business. It is known as a liability because the bank did not give you this money forever. It is what you owe them and you're expected to pay in future. That is why it is called a liability. You could also combine both options. You could invest from your personal money and also borrow from the bank. Now, let's take for instance, if you invested 600,000 naira from your personal account and borrowed 400,000 naira, making it up to the 1,000,000 naira. Now, what do you own? Your assets. You remember we have shelves and we have inventory and also cash amounting to ₦1,000,000 naira. That is your asset. Now, what is your liability? What you owe the bank remains 400,000 naira. And what is your equity? The money you invested in the business remains 600,000 naira. Now, that is your accounting equation. Your assets, whatever you have as a business, is as a result of combining what you owe and what you have, combining your liabilities and your equity, what you owe and what you have that you're bringing into the business. When you add those two together, that is your asset. This is the accounting equation. This isn't just an accounting formula, it's the answer to one simple question. What does the business own and where did the money come from? Your assets are what you own in the business. Your liabilities are what you owe, and then your equity remains your share in the business, which is why your assets can never be more than the liability and equity components combined. Now that's the accounting equation. Remember, you do not have to memorize accounting, just understand the business and the accounting will make sense. See you in the next lesson.